wise man once said, "The will to win, the desire to succeed,
What takes guts is to put yourself on the line.
the urge to reach your full potential.
A leader makes the way.
These are the keys that will unlock the door to personal excellence." Success Resources is the world's leading events promoter of business, personal development, and wealth creation programs. For over 30 years, we've helped over 10 million people across 30 countries unlock their full potential. From North America to Europe to Africa to Asia to Oceania, we are the key to your personal success. We open the door to the world's best speakers such as Anthony Robbins, Sir Richard Branson, Robert Kiyosaki, and T. Harv Eker, to name a few. Praised by Donald Trump for being the world's best, we have over 500 events a year and access to the greatest thinkers, achievers, and motivators of our time. We guide you to the success that lies in every one of us.
But you will not discover your greatness in your comfort zone.
You have to have confidence in yourself.
We have never really truly reached our destination. There's always another level to strive for. Your best is yet to come. Success Resources, your learning partners.
Welcome, welcome all. You are divine. Shake hand, going to be good. Welcome to you. Welcome, welcome home. You are shake, going to be good. You. Hello, 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 everybody. Hello, everybody. Hello, everybody. Welcome to all of you. Welcome back to Bitcoin Journey to 100,000. Yeah, welcome, everybody. Now, today we are in the month of September. Many things happened in August, including Bitcoin went all the way down to 19,000. Wow, kind of scary. Yeah. So what's happening and what is going to happen to Bitcoin? This is the thing that we want to discuss today. My name is Richard Tan from Success Resources. We are the world leading education provider. Very regularly, this is streamed live on Facebook, YouTube, and we are making video tracking the incredible journey of Bitcoin to 100,000. Many of you have been following us through this journey, and we are still on this journey. So if this is a journey you would like to follow, make sure you subscribe to this channel and tell your friend about it. Now, I'm very happy to bring my friend and our teacher, Dr. Clemen Chiang, to the program. He's an authority in financial investing and a very well-known teacher to many thousands of students all over the world in the art of wealth creation. Dr. Clemen Chiang, welcome back home. Welcome back home.
Wow, Richard, good to be back. Been away for more than 1 month on a sabbatical, but it's really amazing back again, once again, to be on this show with you and with the team from Success Resources. I'm really excited to share what I've learned over the past month. Yes, I'm ready.
Dr. Clemen, now, before we start the program proper, first of all, we want to welcome you back home to this paradise, otherwise known as Singapore. Now, you have been in the US for quite a long time, I think about a month, I believe, in Harvard University. So let's start by asking you, let the audience know, how is your holiday there and what actually are you doing there in Harvard University?
Well, first of all, Richard, I was not on a holiday. I was
Dr. Clemen.
I was going there as a student, and I took part in this program called OPM, Owners Management, Owners President Management Program. This is really a key flagship program out of Harvard Business School. In fact, the very first business school in the world was actually established in Harvard University. And I was very, very proud and humbled to be representing Singapore, the only one born and raised in Singapore to be in the program. We have participants from more than 40 different countries, and most of them are the who's who in the business world. But what is really a big takeaway for me this trip right now is that, you know, throughout the 3 weeks program, we were diving in deep to understand the best practices of the best companies in the world. So Harvard is really known for creating case studies on different businesses, different companies out there. We dive in, we analyze the case studies, and I'm very, very proud to share with you that, you know, towards the end of each case study, the professors will kind of preempt us and ask us what's the decision that each of the businesses that we study, what is the business decision that they should undertake that will lead them to the next growth. And I kind of hit quite a number of strikes. Strikes means I kind of predicted and got it right, and that's how the businesses have transformed. I hope to bring this passion as well as this know-how back here to Asia and here in Singapore. Yes, Richard.
Thank you, thank you. Well done, Dr. Clemen. Well, Dr. Clemen, you have been away. A lot of things happen. I'm sure you are also in touch, right? Even though you are studying, right? Yes. So we are in the month of September, and in this coming couple of days, or even in this month, we have many US economic data this week, and we know that many of this data is going to affect the market. So we have the consumer price index, which is on Tuesday. So right, today is Tuesday, but you know, in a couple of hours it will be Tuesday in the US, and we have many other data: producer price inflation, retail sales which is on Thursday, producer price inflation on the US Wednesday, retail sales on Thursday, and then freight manufacturing index also on Thursday, and many data on Thursday. Consumer sentiment also on Friday, and the job data on Thursday. So my question to you, Dr. Clemen, is this: now, what are all these data? And I know that, you know, you are very, very into like knowing what is the market. So how are you preparing yourself for this data announcement? So maybe you can share with us, how do you prepare yourself when this data are being announced?
Yes, absolutely great question, Richard. And maybe I move over to share my screen right now. What you have just highlighted to us are key what we call economic data coming out from Wall Street. Now, first, the biggest takeaway that we must have when we look at all this data, ranging from consumer price index, producer price index, or all these are primary inflation data. Big takeaway is that they are all lagging data. They are lagging behind of what actually on the ground is actually happening. Now, sometimes the lag can be between 1 to 4 weeks behind. So just bear in mind, they are, number one, lagging data. But number two, which is a more important point, is that the Federal Reserve, or the Fed Chairman Jerome Powell, they base their decision on all these data that I box out in the red box right here in front of us. All of their decisions are based on the data shown in front of us. And the most important of them all is always the consumer price index. All right? Now, this is the one that's the key primary driver for the Fed decision whether to raise or to lower the interest rate. And as we know, tomorrow will be the CPI data that will be published, 8:30 a.m. Eastern Standard Time. That will be 8:30 p.m. Singapore time. And then you add another 8 more days to that. The next following Wednesday, that will be the actual FOMC announcement of the interest rate hike. Now, I'm going to switch right now to this particular screen that's coming from the department, or known as the US Bureau of Labor Statistics, BLS. All right. Now, on this website, it gives us a very clear historical performance of the inflation data, or otherwise known as the CPI, Consumer Price Index. So, how do we go about interpreting this chart? we start from the bottom here. Now you can see it started from the year 2002 and all the way to the current year of 2022. Now what is really, really important right now, despite whatever numbers that you read on the mainstream media or social media, the Fed chairman, Jerome Powell, he's so laser focused on one single metric. And that one single metric is he wants to keep inflation down to 2%, which is the red line I just drawn in front of you. This is the single-mindedness of our Federal Reserve Chairman, Jerome Powell. Everything that he does right now is just to bring inflation down 2%. And you know, Singapore, we have a slogan called, do or die, don't ask why. Inflation has to come down to 2%. Now, another way to manipulate this chart is, you can see at a point in time, back then in 2020, inflation starts to break above 5%. So this is really painful for all of us, because during that period, we have been assured double, triple, quadruple times by the Fed chairman, as well as the Treasury Secretary, Janet Yellen, as well as the President, Joe Biden, that inflation is transitory. But the problem is this. The moment it starts to touch 5%, starting from May 2021 last year, it has not looked back. It just keeps going up. May 5%, June 5.4%, July 5.4%, August 5.3%, September 5.4%, October 6.2%, November 6.8%, December 7.0%, and in January this year, shot up to 7.5%. And back then, we missed a golden window of opportunity. In January's statement by Fed Chair Jerome Powell, he was still telling everybody that inflation is transitory. That is the problem. Now, of course, right now, on hindsight, everybody looking back, he admitted he made a mistake. Not just him, Janet Yellen also admitted that they overlooked the inflation and became a big sore thumb right now for the current administration. So we track from January 7.5%, we kind of move on February 7.9%, March 8.5%, April dropped a little bit to 8.3%, May 8.6%, June 9.1%, and then July 8.5%. So tomorrow, you'll be announcing for August. So keep the number at 8.5%, and then I zoom back to my picture right now. Everybody right now is really excited about tomorrow's inflation data. Why? There are a few metrics to look at. Number one, China is on a lockdown. I mean, it's like on a forever lockdown. And the important date for China is 16th of October, where the crowning of the emperor will take place. That's the most important event of the year or of the century for China itself, because he has gone against Mao Zedong doctrine of maximum 2 terms as the president of China. He's going to change that. He's going to reinstate himself as the 3rd-term president and perhaps a forever emperor. So everything has to work towards this single date, 16th of October, which also means that right now Beijing, Shanghai, Chengdu, Shenzhen continue on a lockdown based on face value. And I had this interesting conversation with one of my Chinese classmates from China at Harvard Business School. I think politically he's well connected to the Communist Party. And we asked him, hey, what the heck is going on? There's this mission impossible to bring COVID-19 to zero. Is mission impossible. And he accepted the fact that, yes, it's because of face value. Everything must work towards 16th of October. And once that date passed through, then things will start to go back to normal again. All right, so number one, production out of China is still being shut down because of the COVID-19 shutdown itself. So things are not really moving in that part. Energy prices has dropped, which in turn will have an impact on the way consumers go about spending money. Now, when I was there in Boston, I went to the premium outlet to kind of do my grassroots check. Oh my gosh, Richard, you cannot believe it. The Americans were spending money like there's no tomorrow. Everybody walk out of the premium outlet with two hands carrying bags. I mean, big bags, Nike bags, and they're buying like non-stop. So that is a concern. So that brings back to this important point. Tomorrow, are we going to have inflation above 8.5, remain at 8.5, or below 8.5? So there's only three outcomes for us to think about. Now, Wall Street believes that inflation is going to drop below 8.5. Now, if we kind of hit like 7.9 or 7.8 or even 7.5 just for scenario planning, we're going to have a major rebound tomorrow. So back to your question, Richard, what do we do one day before the inflation data, which today we have a window itself on Monday just to trade into the market? In fact, many of us are placing our trades because we expect inflation to go down. Honestly, inflation has to come down. If not, we're going to have a major drop in the entire market. So this is the moment in time. If you believe inflation is going to drop below 8.5% tomorrow, and if it is true, it announced at 8.0 or 7.9, let me tell you, everything will turn green. 11 sectors of the market will turn green, and your portfolio will just shoot up overnight. That is scenario number one, and I think that should be the likely scenario. Scenario number two is inflation stuck at 8.5% for August, no change. Now that's bad news. If there's no change, the market will turn red overnight. And scenario number three, if the inflation goes above 8.5%, then the market will dive down really deep red. So it's only 1 out of 3 chance that the market will turn green. So the probability is about 33.33%. But is this a strong probability? We believe it to be true. That's the reason why Dow Jones was rallying up while I was away in Boston. And suddenly the Fed chair realized that, oh my gosh, Wall Street is front-running the FOMC. And he didn't like that. What did he do? He came in and threatened everybody that we're going to raise the interest rate like there's no tomorrow. And the short, what we call bear market rally, came down hard. And that's because the Fed chair right now wants to front-run Wall Street and to make sure he is in charge. He is the real boss. And that's the kind of numbers that we're looking at. So to sum it up, all these numbers that we are seeing in front of us, whether it's PPI, retail, manufacturing, Philly Fed, jobless claims, consumer sentiment, the most important of them all is a CPI. Now the rest are just playing secondary, tertiary roles to support the data. But the major decisions on FOMC interest rate hike 8 days from tomorrow will be based on the CPI, which will be published 8:30 a.m. Eastern Time tomorrow. Back to you, Richard.
Thank you, Dr. Clemen. Well, ladies and gentlemen, that is a very important news for you that in a couple of hours, the CPI number is going to come up and you have to make a decision what to do. Okay, good. Now, next up, Dr. Clemen, there's a report that says that 52% of everybody that buy Bitcoin, invest in Bitcoin, are losing money right now. Only 47% are in a profit, and just 47% are actually people who have bought like quite long time ago, right? So majority are now at a loss. Their holding are at are in a red, and only a small portion are in a profitable. So it's a very important question for many of us. Is Bitcoin still a good investment, or Bitcoin already dead already?
Wow, Richard, this is a very sharp question. And, you know, I strongly believe, and, you know, we went through numerous debates. In fact, this topic at Harvard Business School, we also have a very famous, renowned economics professor teaching us about macroeconomics. Now, those who come from traditional background, they don't believe in Bitcoin and cryptocurrency to begin with. Just take it as they come from the old school. They don't accept this as a legit currency. But we have to look at it from another angle. And that's the angle I'm coming from. How the world has transformed, and that in every generation there is always an instrument of wealth to uplift the entire generation. What do I mean by that? Let's start from baby boomers, my parents' generation, those born in 1946 to 1964. Majority of those in the baby boomers, they make money in the stock market. Then come down to my generation, Generation X. Majority of us, I'm talking about us as in Gen X in the United States, all right? And I've been one of those rare few outside United States in Asia. We make money from options trading. I was the pioneer batch of options traders in the world. Then the next generation are those born known as the millennials. What money they make from? What's the instrument of wealth? That's cryptocurrency. Many of them make money from the different coins, ICOs, Bitcoin, Ethereum, whatever coins out there. There was a mad rush, right? And then, what is the next generation after the millennial? That would be the Gen Z, the Zoomer generation, which my children belong to that generation. 3 of my boys belong to Gen Z. That instrument of wealth has not surfaced up yet. And I believe that the instrument will start to appear when my eldest son is turning around 25, 26, which is about 10 years from today. And that instrument will start to creep up. And what that means is this. If you think about the logical sequence, the first instrument of wealth is the stock market. The second one is the options trading, which is deriving its value from the stock market. That's the meaning of options trading, deriving its value from the underlying securities, which is stocks. Then the third instrument is Bitcoin and cryptos. And the fourth instrument, which is the Gen Z I'm talking about, I believe it will derive its value from the underlying main instrument, which is Bitcoin. So if that is true, let's take a look at some facts right now. And especially for those of you who kind of feeling suicidal, depression, constipation. Let's take a look at this article. Goldman Sachs to offer Bitcoin-backed loans as more banks embrace crypto. Now, this is a major, major turning point just to think about the crypto market. And they created a very powerful product, which is to the bank's advantage, not to the consumer's advantage. I want to highlight this article because most people wouldn't understand about the concept of LTV. So let me just put out a few things right here. And here we go. So what is LTV? LTV means loan to value. Let me give you a few examples to share about this particular point. Here we go. All right, let me switch over the screen. So this is LTV, all right? Equals to loan to value. Now the concept of loan to value, let me just make my marker goes a bit darker right here. Let me just change this. All right, good. So means, for example, if you have $1 million today of Bitcoin, all right? Now, typically the bank will offer you an LTV of, let's say, typically for Bitcoin is about 40% or 30%, as what we read of how Michael Saylor pledged Bitcoin to extract LTV from the banks. The bank is actually Silvergate. So if he give you a 40% LTV, all right, now means that you collateralize your $1 million Bitcoin and they give you a $400,000 cash. This is the concept of LTV. Now, once we understand this concept, we come back to this article, and this is where it's craftily packaged in a way, really, really amazing stuff right here. Let me go straight to the important article, right? So the first bank that was mentioned is actually Goldman Sachs. And then we have Fidelity, US Bank, JP Morgan. They also have crypto products, all right? So how it works is this. Here we go. Step number 1. We recently extended a secure lending facility where we lend fiat collateralized on Bitcoin, Bitcoin being owned by the borrower, all right? So how do they go about creating this product? It goes this way. Step 1. rather than taking custody of Bitcoin itself, which is the correct format of doing an LTV, they say no. We're going to enter into an agreement whereby the customer, that is you, who's holding Bitcoin, you have to, step one, sell your Bitcoin in order to receive the cash loan. This is the part that's very, very tricky. So if you sell your Bitcoin, you're already getting cash, but the bank is telling you, I'm going to loan you the cash. And then you settle the debt with the bank by buying back the cryptocurrency at a predetermined date that is penned down into the agreement. So in actual fact, in this LTV arrangement that they are talking about here, at no single point in time, no one, I say again, no one is actually holding on to Bitcoin. They force you to sell your Bitcoin just to extend a loan to you. The banks are not holding the Bitcoin. You are not holding on to the Bitcoin. So what happens if there's an event, Bitcoin shoot up to $100,000? You have entirely lost on the capital appreciation of Bitcoin value on its own itself. But for a bank to come to this stage to even offer such a product, it means that the market has matured. This is a good sign. So we are balancing two of challenging balancing scale right now. On one hand, the banks are willing to look at coming out a product just to make sure you buy back Bitcoin at a later date, but at no point in time the banks are holding on to your Bitcoin. It is a great movement, a progress towards for the better. On the other hand, since you are forced to sell away your Bitcoin, you may not be able to take advantage of any appreciation of future Bitcoin movement in prices. So that is the challenge. But all said and done, I go back to the same article. This article actually mapped out all the major key milestones of how we started in 2017 when Bitcoin hit the first all-time high of 20,000, and how many things and how many financial institutions have jumped on board into the crypto space. This is major development. We cannot absolutely ignore all this development and say that Bitcoin is rat poison square. No way you can do that. That's the point I'm trying to communicate to our audience here today. All these are big names: Fidelity, Bank of New York Mellon, State Street, US Bank, Morgan Stanley, JP Morgan, Wells Fargo. These are big financial institutions, and they are going out there with press releases, connecting their brands with Bitcoin. This is major milestone. So the takeaway is this: do you honestly think that that's the end of Bitcoin cryptocurrency? The answer is a big no. No, no way. And the final clue to all of us, just to establish this fact that Bitcoin is not going to go away, I need to show you this article, and you begin to understand the power play or the politics that go behind the scenes that will prepare for a much, much bigger role in the cryptocurrency market. Let's take a look at this article known as Gary Gensler Wants to Regulate Crypto. Step back for a moment. Would you want to regulate something that has zero value? I ask you a reverse question or a devil advocates question. Would you, as a regulator, bother to even want to regulate something that has zero value? You wouldn't, right? You only want to regulate something that has obscene value so that you can still generate cash in your treasury to give you a wider scope of power and jurisdiction. This is how you should interpret this article. The moment Gary Gensler wants to regulate crypto, there's freaking good news. If regulation comes into the picture, it's going to open up the floodgates for bigger money to flow into this space, thereby giving the regulator much more power in politics, in jurisdiction, and potentially this man might be having an ambition to become the President of the United States. You never know the ambition of Gary Gensler. That is how I interpret this article. All right, so here we go. He's saying that all other coins will come under Securities Exchange Commission. All other coins. I want to go to that most important line, and I'm not too sure is it found right here somewhere at the bottom. All right, there's one right here. Ding, 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 ding. And here it goes. Okay, let me just adjust nicely. And he said this: of the nearly 10,000 tokens in the crypto market, I believe the vast majority are securities. Every single one of them, basically. I think the only exception is Bitcoin, including Ethereum, will fall under the definition of securities. All right? So, offers and sales of these thousands of crypto security tokens are covered under securities laws. In general, the investing public is buying or selling crypto security tokens because they're expecting profits derived from the efforts of others in a common enterprise. That's the definition of a security. So all of you better know what this means. It simply means that step one, regulation is to come into play, and thereby giving it more legitimacy to open up the gates for pension funds, for retirement funds, or for sovereign wealth funds, or whatever funds out there to start moving their money into this space, because this is worth regulating. There is obscene value in terms of jurisdiction and political power. That's what Gary Gensler wants to do right now. So, if you are the consumer, you should be very, very happy today that this will come under the ambit of SEC. But on the other hand, you have to struggle with the fact that many of the tokens will have to pay billions and millions of fines just to be regulated. All right? So it's always a balancing act, but I see more better good than worse for this development. Back to you, Richard.
Okay, thank you, Dr. Clemen, for the analysis of the situation currently with holder of Bitcoin. That at least it is not dead, and that we can see brightness in the future if we we have some patience to it. Now, next question is this: that Dr. Clemen, this program is a Bitcoin journey to 100,000. We talk about Bitcoin, but we cannot ignore another big news in the market, and that is of Ethereum. Ethereum is called the merge, right? Moving from proof of work to proof of stake, etc. So, what is it actually, and how is the merge that's going to happen in the next couple of days affect crypto market and Bitcoin as a whole?
Wow, excellent, Richard. This is like so timely, this question, because it's going to happen tomorrow. So let's dive in and look at this article. The final countdown to the Ethereum merge has officially begun. And in fact, the dates are stated very clearly. The activation of the Bellatrix upgrade to the Ethereum blockchain triggers the beginning of the merge, which will likely be completed sometime around tomorrow, September 13, all the way to September 16. There's a three days of window that's going to complete the merge itself, all right? Now, in the same article, what I really like is there is a time frame, a timeline that is being presented. And I want all of you to go about studying this timeline. And these are more like technicalities. And I essentially going to give you the brief abstract, what this merge means to all of us. Number one, the concept of proof of works was started way back at the beginning of the evolution of all cryptocurrencies. Meaning to say there got to be miners mining so that through the consensus, every blockchain is being validated. No one can play cheat on the blockchain. And the whole takeaway about why blockchain is so beautiful is because blockchain itself builds trust between different parties. That's the concept of trust that's building on the foundation of blockchain. And that is possible because of proof of works in the past. Now, this merge essentially prepares us for the next evolution called proof of stake, POS. Now, proof of stake means that, especially for Ethereum organization, they put it out openly at ethereum.org that if you own 32 ethers, you can take part in the proof of stake. That means you just stake your 32 ethers onto the blockchain and you start collecting interest without doing much work. You don't even have to do any form of mining, all right? So it's like a long-term yielding product that you can make money, and as the price of Ether starts to appreciate, you also enjoy the capital appreciation. So you collect interest, at the same time you benefit from future capital appreciation. This is the next evolution of blockchain, and that's why this merge is so important to us. Now, with this backdrop, then and only then we go and look at the chart of Ether. All right? So a few things that we need to take note of, and I'm going to show you all three charts. I hope we have enough time to cover this. Step one, I'm going to first show you Bitcoin chart with the same time frame. Bottom left-hand corner is 2020. Bottom right-hand is the current time frame. Now, I want you all to know a very, very important line. We take it as the 1st of December in the year 2020, and we draw a horizontal line across. And straight away, you can begin to see Bitcoin at 20,000 is a super duper strong support line. That's why Bitcoin is holding right now at a 20,000 level. Obviously, it has dropped to 18,000, dropped to 19,000. It still float around 20,000. Right now, there's movement up to 22,000 because of anticipation of the merge to completely take place, and no hackers is going to destroy the merge, all right? So better pray hard, nothing happens during the next 3 days. The merge is completed, crypto prices will start to move. But I want you all to look at this part here, which is defined as 1st of December 2020, all right? This is Bitcoin. Now, what caused Bitcoin back then from the price of 20,000 and start shooting up to the first high, right over there, 64,000, and then it dropped to 30,000 and shoot up to the second high, 69,000, all right? But all this shooting up will not have been possible if not for 1st December 2020, which I'm going to explain to you why. Let's go to the second chart right now. Again, bottom left 2020, bottom right current time frame. We are looking at micro strategy. So I'm going to put back my horizontal line. 1st of December, draw across. Back then, MicroStrategy was trading at $250 per share, and we drop a vertical line down right there. And the reason why Bitcoin started to move, and I cannot attribute 100% of the credit to Michael Saylor, but a majority of the credit really has to go to him, because he started the announcement of MicroStrategy buying Bitcoin, and that pushed his stock price all the way up to $1,250. He was truly the #1 advocate of Bitcoin, accumulating Bitcoin through 4 different models, which includes a reverse buyback, LTV, issuance of securities with 0 interest or with 1% interest. This is unheard of on Wall Street, all right? So he really pushed the price up really high. And finally, we come back to Ether, which is our point of discussion. And again, you trace back from 1st of December for Ethereum. You draw across, that's around $600. And if I replicate this line and move up to $1,500, this is the window we are looking at. And if there's going to be a big breakaway from the merge, then we have to focus on this red square just drawn in front of you. Because why? It will start to cross above the 200-day simple moving average line, and it will go something like this. And this is the most important spot that we are trying to track. It could take place at $2,000 per Ether, and that is the signal. And the signal will take place in the next 3 days. The moment it starts to cross above the 200-day simple moving average line, let me tell you, every major crypto players out there will go into the market to start snapping up Ether and perhaps push the price of Ether to 2,500, 3,000. I think that's the real stretch that they want to push. And once that happens, there'll be a dampener. Mr. Gary Gensler will come in and say, all of you jokers, you are right now regulated under Securities Exchange Commission. And that is the game plan. Back to you, Richard.
Wow. Okay, man. I hope Gary Gensler won't take this video and then take action on that. Okay, good. Well, there you are on the big news of Ethereum merge wisdom from Dr. Clemen. So next, Dr. Clemen, we want to discuss on Michael Saylor actually, or MicroStrategy. So recent filing in SEC from MicroStrategy is that they want to sell 500 million of MicroStrategy stock. And they also put the purpose is for operation as well as to invest in Bitcoin. Now, we all respect Michael Saylor, but recently Michael Saylor, there's news about Michael Saylor, getting into some challenges with tax and also his comment on Ethereum. So my question to you is this: why do you think Michael Saylor is so positive into Bitcoin despite the downtrend and despite all the trouble that he's in right now?
Yeah, great question. I think there's, first of all, there's three major takeaways about this issue surrounding MicroStrategy and Michael Saylor as the boss. So step number one, and I'm presenting to you in a logical sequence based on this. Before the district Attorney General filed this charge against Michael Saylor of tax evasion, I bet Michael Saylor already knew about it, and he has informed the board, and that's the reason why he stepped down in his role as the CEO and moved himself up to the level of a chairman. He already knew this thing is coming. So he cannot run away from this. This is a very serious charge of tax evasion. Whether there'll be a punitive measures or he can do a settlement, maybe ask him cough up 1 billion to settle and hush everything. And this is very common in Wall Street, all right? So this, we have to wait for it to play out. So this is really the step one that Michael Saylor already knew he's getting into trouble with the Attorney General. Then we go into step two, whereby he stepped down as the CEO, moved himself up as the chairman, but he continues to use his instrument, which is the company MicroStrategy, to acquire more and more Bitcoin. Now, to many people, when we look at 500 million, we think that this is like a very significant amount of money. Let me tell you, this is really peanuts. We shall go to point number three. Let's take a look at CoinMarketCap itself. Today, the entire crypto market, including Bitcoin and all other coins, has dropped to $1 trillion market cap. We have dropped significantly. But if we look at the market cap of Bitcoin itself, it has also dropped from that 1 trillion high. When Bitcoin is trading at $53,000 per coin, then the market cap will be 1 trillion for Bitcoin. It has right now dropped to more than 50%. It's only trading at $418 billion market cap. So in retrospect, if you look at the $500 million contribution to buy Bitcoin, this is little drop in the ocean. This is peanuts. It's not going to move Bitcoin. It's just more like a confirmation, vote of confidence to the Bitcoin hodlers, stay in the game. But this 500 million is not going to move the 418 billion back to the 1 trillion. Not yet. Until Gary Gensler settles down with the power, the new power that he has found. All right. So everything right now surrounds on politics. How much power this man wants. Because what we truly want is all of the cryptocurrency to fall under CFTC, Commodities Futures Trading Commission, and not under the Securities Exchange Commission. But Gary Gensler has unilaterally went out there, start hauling up all the crypto companies and report them to SEC. So there's a power play behind, and it's going to be interesting to know who will win on the midterm election, 8th of November this year. And I believe Joe Biden is not going to run for election. I don't think he has the capacity to run again. And right now, it's really a big question mark. Who's going to be the dominant party in power after 8 November? I believe the Democratic Party is going to lose many votes. And that's why they have to push through all the last-minute legislation before they lose their power. Republicans coming back strong. And one very interesting signal for all of us to understand is this. When they go after Donald Trump, at such a last minute, as you count down from the day he stepped down as a president until this month, that's called last minute. If they found anything wrong with him, they could have arrested him or raided his house within 3 months after he stepped down. They didn't do it. They dragged until we are near to the midterm election, and the last 3 days of the window to kind of storm into his house, they did exactly that. Because Donald Trump is still the strongest contender of the Republican Party to run for the presidential election 2024. So this is a game of politics. Back to you, Richard.
Okay, thank you, Dr. Clemen. Now, Dr. Clemen, we come to the last question. And we are going to meet again in a month's time. Maybe the first week of the month will be, first Monday of the next month will be 3rd of October. So to leave all our participants a anchor for us for the next 1 month, this is a question for you. So you have gone through countless market bull, but more important, market bear, right? Cycle during your career, during so many years of your career. Now, ordinary people right now who put their hard-earned money into stocks and crypto are actually panicking and kind of depressed, Now, how do you handle a bull time like this?
Yeah, so how do you handle bad time like this, is it?
No, they say bad time, they say bull time, bad time.
I heard bull time, eh?
Bad time like this. Yeah, you're right. How do you handle bad time like this?
So, very good question. I made a decision way back in June this year that I want to really rally the community so that everybody don't step into depression, look at the Red Sea and start feeling suicidal and all that. So I start doing what we call a daily live streaming on YouTube, starting from 1st of July. And so far the response has been really good. When I was just back from Boston, I received this letter from YouTube. Oh my gosh, we finally surpassed 100,000 subscribers on our YouTube channel, a recognition of our work. And YouTube has this very interesting algorithm. If the videos I share are kind of interesting, they have one special way of calculating the algorithm. They will suggest the video to many other people out there. And so we got a few videos that hit 30,000, 50,000, 80,000 in one day. It went viral. And this is where I come in to step up as the teacher of the market. I want to attribute and contribute really great educational value to the audience. And what I observe, especially during this kind of a crazy market seasonality, is this. 3 things for all of us to learn from. Number 1, you will see many advertisements out there talking about investment, about strategies, about black box, about concepts, about tactics and all that kind of stuff. And I only get to know about all these advertisements targeting at my YouTube channel. Because every time I run my YouTube channel, there'll be advertisements appearing, and we start to see, wow, so many people talking about investing. But as I look at them, my takeaway is this. They spend more time coming up with gimmicky ideas to draw viewership to look at their ads than to really teach contents, real contents that will educate people to have a different view or to have a better analysis of the stocks or the market. So that's my first takeaway. Second takeaway is this. How do you go through a very tough time like this? You have to stick to the market even closer. I started investing in year 2000. I mean, if you count backwards, it's like I spent about 22 years in the market, and I'm still right here very passionate about the market simply because of this. In a bear market like this today, you have to stick to the market even closer, spend more time, read even more, study even more, and trade even more. I've been firing minimum 1 trade per day since 1st of July. And I told myself I cannot slow down. I must increase my number of trades so that I keep pulse of the market and I stick to my investment thesis. My thesis doesn't change. I have certain views about the market. And in fact, so far we have been playing out really, really nicely, waiting for a strong pen-up rebound on Wall Street. And the third and the most important takeaway is this. In a downtime like this, you really got to do 3 things right. And I'm going to teach you 3 different words. Number 1, this is the most important time to learn even more about the market than in a bullish market. Now, in a bullish market, any idiot, I'm literally using this word, any idiot, throw a dart into the market will make money. Bull run is very easy to make money, and we are just all preparing ourselves for the bull run. And we've gone through many bull runs, we make easy money, all right? How easy? 5 to 100% profit return in 1 day. You can do this every single day, Mondays to Fridays. But in a bear market, this is the time you must learn the most. Really dive deep. So I challenge my viewers every day, go and find the most important article that will influence the market for the day. You guys all go and find your article of the day. I will find my article of the day, and when I go live stream, let's see if there's a match. If there's a match, great minds think alike. And then I dive into the article and really diagnose and really understand which stocks we should look at. So number 1, you have to learn even more. Number 2, you got to trade even more. This is not the time to back away. Many people say stay clear of the market. Now, if you stay clear of the market, when the market is tough, have you learned anything? You have wasted your bloody time by staying away. You got to go in even much more deeper. That's where the going gets tough, the tough gets going. This is the time you got to trade more. And I'm not asking you to trade all your family fortune away. No. You got to trade more by increasing your frequency with smaller bets so that you stay in tune and you can really learn more, because every time you trade with real money, your emotions are attached to the game. That makes you a better trader. So you learn, you trade, and the most important of all, you got to share the most. I take the lead as the teacher. I share every day, Mondays to Sundays. I don't stop. But I also challenge all of our students, you got to start sharing your winning trades. Don't, because of the market, you forgot about your winning trades. Every one of you should have your winning trades. I challenge you, you should have your winning trades. But if all that you see are all the red ocean and you forgot about the winning trades you made, then you just created a negative spiral for yourself. So learn, trade, and share. Richard, that's the 3 secret recipe to go through a bear market.
Thank you, Dr. Clemen. There you are, Bitcoin journey to 100,000. Now we believe that Bitcoin is amazing tools, right, for your financial future. And we remain positive on Bitcoin. Till we meet again next month, this is Richard Tan, Dr. Clemen, and all our team here wishing you a wonderful months and years ahead. Thank you so much. Thank you.
We believe that investing in our education
has the highest leverage and is the greatest equalizer.
We believe that time spent among trees is never wasted.
He who plants trees loves others beside himself.
We believe that a small group of committed citizens
can change the world. Indeed, it's the only thing that ever has.
Regardless of background, everyone can have the same opportunities in education.
We believe that together, everyone achieves more.
We believe that real leaders don't create followers, they create more leaders.
We believe that we can learn from our competitors.
We believe that women work harder
do better, and are more.
We believe Earth is where we all meet.
Where we all have a mutual interest. It is the one thing all of us share.
We believe that trees and forests are the lungs of our land.
Purifying the air and giving fresh strength to all people.
We believe that happiness is the key to success.
If you love what you're doing, you're already successful.
We believe that Earth is a wonderful place and worth fighting for.
We have a duty to protect it.
We believe in doing what is right, not what is easy.
We believe in anything that is worth doing, we do it with passion and excellence.
We believe that when the market is tough, we can be tougher.
We believe the best product should win, not the best sales pitch.
We believe the best time to plant a tree was 20 years ago.
The second best time is now.
We believe that winners are winners because they don't quit.
We believe in making decisions and owning our results.
We believe in innovation to continually provide value to all around us.
We believe that if dreaming is free, then we should dream big.
We believe that if we have knowledge, it's our duty to pass it down.
We believe that learning never ends, and once you stop learning,
You start dying. We believe that someone sitting in the shade today
Because someone planted a tree long time ago.
we believe that one person.
Or one great idea can change the world.
That's why we believe in helping you grow and succeed.
And with your help, we can change lives globally.
one tree at a time.
We believe.
We believe.
We believe. We believe.
One tree at a time. Thank you for your belief in us.